Hello and good afternoon. I would like to welcome you all to the First Advantage Debt Consolidation webinar with Jennifer Register. Today's presentation will be in listen-only mode, which means you will not be able to interact with the speakers verbally, but we do encourage you to ask questions. And you can do so by expanding the control panel that should be down on the right-hand side of your screen, and you will then see a questions bar. So feel free to pop any questions that you have in there, and then we will answer them at the end of the presentation. So without further delay, I will now turn this over to Jen. Jen, are you ready?
Yes, ma'am. Good afternoon, everyone. I knew I was going to do that. Good afternoon, everyone. Thank you so much to Amber and Jess and marketing for getting all of this really cool technology set up. I'm excited. This is not my first webinar, but it's my first with some really cool tools that we'll be using today. So with that, I'm going to go ahead and share share my screen. We practiced yesterday. I just want to make sure there we go. All right. You all should be seeing our slide here, basics of debt consolidation. Thank you again to everyone who is on. I am Jen Register. I'm the Chief Lending Officer here at First Advantage. And we are going to be talking about just some overall things to consider if you are personally considering debt consolidation. So our overview today, we're going to talk about how you determine what your current financial credit situation looks like, some methods to approach debt reduction, some common ways to consolidate debt, some warning signs of a debt consolidation scam, and also resources that First Advantage has available for its members. Just to get a feel for where you all are and basically maybe why you're here today, what interests you as far as debt consolidation, I am going to launch a poll. This is one of our cool tools I'll be using throughout the day today, or throughout our session this afternoon. And I will tell you, our polls are completely anonymous. All it does is tell us how many people answered, how much in each one. And actually, it's looking like, for some reason, I don't have that poll available. So we won't go with that one.
Then I just launched it for you.
Oh, thank you. I don't know why it wasn't showing in mine. Oh, that's for the next slide, actually. But we can go ahead and get some answers on that one. So jumping to our next slide here. What does your financial picture look like that you know right off the bat? So how is your cash flow monthly? Is it not enough? Is it just right? Have a little extra at the end of the month, a lot extra at the end of the month. I see our answers coming in here. And we'll give it just a few more seconds. Like almost everyone has answered at this point. So this is one of those questions that goes into determining what your financial or credit picture looks like. How many loans or lines of credit do you have with balances? What are the balances of each of those? What are your payments on each? What are the interest rates on each? So all of these questions are ones that you need to answer, along with how are you feeling about your monthly cash flow? So thank you to everyone who has answered, and we're going to go ahead and close the poll. It looks like, and I'll go ahead and share the results. Looks like most people were either in the not enough or in the just a little extra at the end of the month. And so we're going to talk about what that means and how that could affect what your goal is when it comes to debt consolidation. Thank you guys for that. All right. So we'll start off with an example credit situation. Again, this is just a sample of what someone's credit might look like, and obviously tried to keep it as basic as possible. Here we have an individual who has a car loan. You can see here in list form, we have the balance, the interest rate, the monthly payment. There's a credit card, balance, interest rate payment, another credit card, and a personal loan. Obviously in list form, it's a little bit hard to digest. What I find makes it a little bit easier to fully understand your credit picture is looking at a chart or using like an Excel spreadsheet to create a chart. You can do it in Word, you can do it on a piece of paper. But really getting a feel for what your credit situation looks like in these categories is going to help you when it comes to your overall debt consolidation. So looking at this picture, we have the car loan with $20,000, interest rate 4.5%, payment of $300. Again, with it in chart form like this, you can see things like the car loan seems to have the best interest rate of all of the loans, but it's also got the highest payment. So that's where the biggest drag on your monthly cash flow is coming. On the flip side, you have credit card 2 has the highest interest rate, but it's got one of the lowest balances and it does have the lowest monthly payment. So with that, I'm going to launch our second poll here. And I think I can do this, Amber, although, you know, I might need your help. Let's see. All right. You should have a poll now on your screen of the situation I just shared. Do you think this individual should consolidate all of their debt, the credit cards only, the credit cards and the personal loan, the credit card 2, which was the one with the high interest rate and low payment, and the personal loan, or the car loan and the personal loan only? Got our votes coming in, answers coming in. We'll give it a few more seconds before we close it out. Thank you all for answering. And again, it's anonymous, so if you get the wrong answer, it's okay. All right, we're going to go ahead and close out our poll. So looks like, I'll share the results here. We had 28% said all of them. We had 32% say credit card 2 and the personal loan. And then 20% on each for the credit cards only or the credit cards and the personal loan. So we were kind of all over the place. It was a real mixed bag. The real answer is, and I kind of alluded to this earlier, it really depends on your goal. So as we discussed, considering what your monthly cash flow is and how much you have at the end of the month, not enough, just right, or maybe a little extra, will really drive what your goal is in many ways. So if your goal is to pay off debt as soon as possible, then you might be okay with having a little bit higher monthly payment. So maybe that's just paying off those unsecured debts, because the car loan is at a higher payment, low interest rate, so you want to keep that where it is. If your goal is to pay less interest monthly, also could be different. But if you're in the situation where you don't have enough funds at the end of the month, then maybe your goal is to decrease your monthly payment overall. So some questions to consider, again, depending on what your goal is when you're considering debt consolidation. So if your goal, your overall goal, is to pay off debt as soon as possible, that's where you need to consider, how much can I afford monthly? Can I move some of my debt with higher interest rates to a lower interest rate product? Can I pay more towards my debt with a higher interest rates? Can I move all my debt to one loan with a low interest rate and low term? So, moving all of your debt to something that's going to pay off in 2 or 3 years, if your goal is to get everything paid off as soon as possible, it's probably going to have a, depending on how much debt you have, it might have a higher payment than what you're used to, but then you've got all that debt gone. On the reverse side of it, decrease the amount that I pay monthly, you might be wanting to move all your debt onto something that has a lower interest rate but a higher term, so that your payment is going down some. Now you're paying lower interest, but it might take a little bit longer to get it paid off. Something else that you can consider is looking for options where you either have no or a low payment for a period of time. Sometimes there's loan specials where you don't make a payment for 90 days, and so then you're able to bank a little bit extra and create kind of that nest egg, or pay off some debt while you don't actually have payments due on one piece. You can put it towards another piece. So again, debt consolidation is not a one size fits all. It really is going to be based on what your personal goals are, and knowing what your personal goals are is really determined by your cash flow, and then taking a look at your financial picture, which we talked about. All right, with that, I'm going to put our example into a tool, a resource that First Advantage does have available. This is actually a calculator that is on our website. So even if you are not a First Advantage member, although you should be because we are amazing, even if you aren't, this is a tool you can access. And I'll show you a little bit later in the presentation how you can get to it. But essentially, using our First Advantage website tool, this is our debt consolidation calculator, you can put in what you expect to pay in terms of interest rate and how long of a term. And this is information you can find out by talking to a loan officer at First Advantage. If you're not a member, most other financial institutions should have the information as well. And down here is where you're going to put the balances that we talked about. This is one of those where it comes back into play why it's important to know that full financial picture. So here you have your balances to the credit cards, balance to your other loan. You have your payments listed monthly, as well as your interest rates. And then once you put this information in, you hit calculate. And once you hit calculate, then you are going to get these answers on the side here. So first we're going to look at the current debt summary. So this information right here is basically telling you you currently owe $20,000, which we know. Monthly on these three debts, you're paying $300, and your total interest, if you just keep paying these payments at these interest rates, your total interest over the life of these loans, assuming you don't add any more to the balances, is going to be $15,377. And your longest term, so the loan that's going to pay off last, and basically how long it will take you to pay off all this debt, will take 239 months. So you're just shy of 20 years at your current situation. Now the consolidated loan summary is telling you, okay, based on the information you put in here, the 10% interest rate, the 60 months, so at this loan balance, you will pay a total interest of $5,496. Your payment is going to increase to $425, but your loan term will decrease to 60 months. So you'll pay off all of this debt in 5 years with much less interest, paying an extra $125 a month versus what your current situation is. And then the last one that I think is really cool, especially for people who were on the call that said, I'm just about right. I don't really have any extra money at the end of the month, or I don't have not enough. This right here is a really cool tool because it says, okay, you can pay the same amount, so still keep paying $300 a month, but by putting it into this consolidation loan, you're going to cut the number of months it takes to pay off this debt more than in half, and you're going to pay over $5,000 less in interest just by putting it into a consolidation loan at the lower interest rate. So this is a really, really cool tool that we have available. I highly recommend it. You can put stuff in, take stuff out, hit calculate 75 times. I think 75, 76, you're really pushing it, but 75, I think you're okay. And you can get a lot of great information that's really helpful in making a decision as to what debts would make sense to consolidate and how it can really have a positive impact on your overall financial picture. One thing I kind of want to take a step back. Obviously, this webinar is all about debt consolidation. However, debt consolidation is just one approach to debt reduction. Another approach, and both of these I personally have used and both have worked for me in the past. The other approach is the debt snowball. This can be really good if right now you don't necessarily qualify for the amount of consolidation loan you need, or it could be a situation where you just really need some momentum moving in the right direction. So with a debt snowball, you basically take the smallest debt you have. So say you have a store card with a $500 balance on it, and you just put as much as you can, still pay all your other debts, but put as much as you can toward that one debt. And then once you get it paid off, whatever you've been putting towards that, you put it towards the next smallest debt. And so you essentially create this snowball, which we should all be familiar with based on our weather very recently here in Virginia. And essentially you feel that momentum and you see your debts getting paid off, and it creates a momentum. Now, where this can be a problem is if you were in that boat of someone who doesn't have the additional funds at the end of the month. It's hard to start this snowball, and then that's where debt consolidation, even if it's not consolidating all your debts, but if it's just consolidating the ones that are going to have the biggest impact on your monthly cash flow, that's where debt consolidation can be a benefit. So these are just a couple approaches to consider when you're thinking about debt reduction and which way to go. One other thing that I have to mention, since we are talking about debt consolidation, is there are scams out there. Unfortunately, debt consolidation and debt accumulation is something that is very common in our country today. And as a result, you have companies that have been created that, you know, their goal is really to make money. And they do it in different ways, but basically it's taking advantage, and a lot of times taking advantage of consumers. So things to be on the lookout for is when you have a company that reaches out to you and says, hey, we can take care of all your debt, just stop paying your bills, don't talk to your creditors. And when you ask more questions, they're very kind of cagey. They don't necessarily want to answer what you're asking. They promise that the total debt that you owe is going to be decreased. They're really pushy and trying to get you in there. Essentially, all those things that just give you that pit in your stomach, that raise that red flag. I would 100% be on the lookout. We have some fantastic colleagues at First Advantage that work in our branches. And if you ever are approached about something like this, don't hesitate to go into the branch. Don't hesitate to call our call center and talk to one of our fantastic colleagues about one of these situations, because they will be happy to walk through the situation with you and let you know if it's raising their red flag, and also let you know what options we have available that don't involve the possibility of a debt consolidation scam. And with that, I want to talk about a few more resources we have at First Advantage. So if you are a member of First Advantage, which hopefully all of you are, through our online banking platform, we recently rolled out a new tool, and it's really fantastic. If you haven't gotten a chance to take a look at it, I highly recommend it. It's completely free. There's absolutely no charge to use it, and there are some wonderful benefits to it. When you log into online banking, it'll be kind of to the right and down a little bit, and you'll see this little box that you see here where it says My Credit Score. You click on Show Full Report, and it will bring up this dashboard that you see here. Lots of really cool things on here. It has your credit score and report, so it'll give you your score analysis, which is basically why your score is what it is, where the places you're doing well, the places you could improve. It gives you your full credit report, so all of those items that we talked about, figuring out what your financial picture is, it's going to give you at least the balance and the payment piece of it. The interest rate, you might have to do a little digging on your own, but it will give you the balance and the payment piece. And then this last piece is the score simulator. And again, if you're considering debt consolidation, this can be another tool to help you decide what option to go with when it comes to which debts to consolidate. You can see here, I plugged in some information and basically said, okay, if I consolidated all of the credit card debt, so the credit card debt that was on this credit, if I consolidated that, what would that do to the score? And in this case, it would increase the score by 14 points just consolidating the credit card debt. Now, in this case, there wasn't a lot of credit card debt on it, or at least the amount of credit card debt to the maximum wasn't very high, but it still had a significant impact. If you are riding close to those maximums as far as your credit report, or even above 50%, you can see an even more significant positive impact on your credit by doing something like that. The other thing at the top here is it has loans and offers. And right there is where you can see what options First Advantage has available now in your different credit products. And the offers you're going to get are going to be based on what your current credit score is. So you're not just seeing this is the A+ score and you're like, well, you know, my credit's not exactly A+, it's good, but it's not exactly A+. I don't think I'm going to qualify for the best rates. The rates you're going to see in here are the ones that you do qualify for. So again, free, really cool product. I highly recommend getting in there, playing with it. Again, feel free to reach out to our colleagues at First Advantage if you have a question about this, and also know that whatever your score is in here, that is the score that we'll use as far as determining any kind of rate for loans that you do apply with or apply with us for. The other resource that we talked about earlier is the through our website, the calculators. So here you can see this is a screenshot of our website. At the top, you'll see we have 3 little headers here. You'll click or hover over the advice. There's a tools column and then calculators, and you'll click on the calculators. When you click on that, the page that comes up will have all of these options that you see here, all of these calculators, which can all be very helpful depending on what you're considering. Obviously, our presentation today is about debt consolidation. So the calculator I was showing you is this one down here. Should I consolidate my debt? Get started. And you hit the get started, and that brings you directly to the calculator we were looking at a couple slides back. But again, lots of good options here to help you no matter what questions you might have. So with that, we've actually come to the end of our material, and I am happy to see what questions we have. Oops, looks like we have one in here. Again, open the drop down on your, if you open the drop down on the toolbar, that will give you the option to ask questions. So first question, will we be able to receive a copy of the presentation following the webinar today? Amber, can you confirm, is this going to, I know the overall presentation will be put on our website. Will the slides themselves be put on, or is it just the overall webinar?
It'll be a copy of the overall webinar, and we'll actually email a link to that out after the presentation as well. So all the recipients will receive it, as well as those who registered and did not attend. And then we will also have a copy placed on our website.
Perfect, thank you. All right, what if you have joint accounts and only pay half the amount? Well, that makes it a little bit more difficult. In terms of as a lender, when you're looking at joint accounts, it really depends on if you're applying for the loan with the joint or if you guys are applying separately. We're still going to count the full payment towards like any kind of debt to income, but in terms of consolidating that debt, or whether you should consolidate the debt, I would determine, you know, is it a situation where you're going to pay off half of it and then that other person's going to continue to pay? It really depends, and I apologize, I didn't see when this question, what slide this question was asked during. Feel free to elaborate with an additional question. I think this was Dorothy, and I am happy to give a little bit more information on that. Are the tools you just showed also available on the mobile app or just the bank website? Amber, can you confirm if the new credit product, is that available on the mobile app or is it just online?
Yeah, so the screenshots that Jen shared, where you can see your credit score and do the simulations, that is available through the mobile app. When you log in and you're on your accounts page, it's a link under the quick links section. And so it just says my credit score. And once you click on that, if you haven't already, you will just do a few simple steps to fully enroll in it. And then it'll pop up that dashboard that Jen showed the screenshot of. The one really cool thing, just like in online banking, once you've registered, you will then you'll see your credit score on that on the accounts page in online banking. You won't have to click through, and so it'll update there. But then you can always click through for details as well.
Thank you. Is the credit score, the next question we have is the credit score the main determinant for loans, or do you look at debt to income ratio? We look at a full financial picture. When I'm discussing underwriting with like our branch colleagues, a lot of times, especially on the consumer side, the biggest factors that are going to come into play, it's kind of like a tripod, essentially. You have credit, which isn't necessarily just score. A lot of it is credit history. Sometimes you have a situation where a person doesn't have a great score because of a recent issue, but when you look at their history, they actually have a strong history. So we don't necessarily just hold the score as the issue or the score as a determinant. A lot of it has to do with the history. The score is what we use to calculate interest rate, but it doesn't necessarily, for us, it's not a yes or no because you have a certain credit score. And then debt to income is absolutely something we look at. That's another part of the tripod in terms of consumer underwriting. And then the third part is loan to value. So looking at what you're purchasing in terms of if you're purchasing a vehicle. Obviously, that piece is completely missing when we're talking debt consolidation loans. So debt consolidation loans, we do weight heavily on debt to income, what it's going to look like after the consolidation loan. So if it's improving with a consolidation loan, that can certainly be a good thing. And then the credit history more so than the credit score itself. All right, when using the credit score calculator, should we trust the links that suggest us to consolidate and how much we can save? I'm always very hesitant. Yeah, me too. So for the most part, yes. However, I would certainly, that should give you broad strokes, could certainly be off by a few dollars. We do try to check them regularly to make sure that they're working the way they should. However, as I suggested earlier, I would definitely consider either going into one of our branches or calling our call center to talk through the scenario, because they have access to tools that are within our loan origination system and are basically what create the loan itself. So they can certainly double check anything that's coming through on the website. But again, we do check them fairly regularly. So they should be ones that you can trust as far as the amount you can save. All right. What percent is debt to income needs to be for a loan? So we like it to be 50% or less. So whatever your gross take home is, we like your monthly debt to be 50% or less. But again, we certainly can consider different situations when you're talking about a dual household. There's a lot of factors, obviously, that go into it. And just because your debt to income may be over that isn't necessarily going to be an automatic decline. But when you're talking a debt consolidation loan, we want to be putting you into a better financial picture. So yes, typically we're going to want that to be below 50%. Do you need a higher consolidation loan? Does it help to have collateral? Collateral always helps. Going back to my answer to the question a little bit earlier, when you're talking about thinking of consumer underwriting as a tripod of 3 pieces, adding one of those pieces back in, then the other 2 pieces don't necessarily have to be as strong. And also makes you more comfortable when you're talking about loaning larger dollar amounts to have some sort of collateral tied to it. The other piece of it is a lot of times it can improve your interest rate. So again, improving your financial picture by having that collateral versus being a little bit riskier unsecured. All right, so it looks like I've come to the end of our questions. Those were some really good questions, and I really appreciate all of our attendees answering. I am going to jump to our, just to give you all some food for thought. We do actually have a debt consolidation loan special going on right now. We've got rates as low as 6.99 for 60 months. And this is actually a special, it's 60 months, but the 6.99 is for our A+ tier, but we actually have special rates in a number of credit tiers. So even if you don't think you qualify for the A+ or you check your credit score and it's not 720 or above, we do still have some great specials going on for debt consolidation. So highly recommend taking a look at our website. You can apply online, try to make it really easy, quick process. We have we have online application as well as processing as well as closing for this product. So we're there when it comes to the technology. All right, thank you guys so much for being on here today. It was wonderful getting to talk with everyone and answer your questions. Please don't hesitate to reach out if you have any questions. We are happy to answer them. And again, I do really appreciate you all being here today. Thank you so much.